one of the areas that's very, very confusing to most people when it comes to the Taxation Act basically is, what is the definition of a taxable benefit? This comes up all the time since the time, what is a taxable benefit and what is not a taxable benefit? So today what we want to do is clear the air once and for all. Now, this really only applies when there's an employer-employee type of relationship. In other words, if it's not that kind of situation, then you don't have to worry about this at all. But whenever there's an employer-employee, so in other words, you're working for somebody and you're getting a benefit from them, then there are some tax implications under the Income Tax Act. Okay. So today, we'll say, if in its simplest form, basically, if the employer is paying for something on your behalf, so they're paying for it, you're not paying a thing at all at this point. When you, in actual fact, receive a benefit at the other end, be it a disability benefit, whatever it is, which we'll look at in a moment, okay, then that benefit that you're receiving will be taxable. You see, it really comes a situation, you just pay me now, pay me later, basically. So in this case here, the employer is actually paying for everything. You're not paying anything at all. So the end result of that is that when you actually receive a benefit at the other end, then it will be taxable. So in other words, at some point or other, somebody has to pay the tax, okay? The second part of that is, if let's say you are in actual fact paying for the whole thing, so it's the employee is actually paying for everything, then obviously because you're already paying for everything, what we call after-tax dollars, because obviously everything we pay for as employees, okay, basically paycheck earners, you might say, all right, we pay for everything with after-tax dollars. So because we are paying for that with after-tax, in other words, tax already been paid, then the benefit at the other end, of course, will be tax-free. So that's essentially what we're referring to. So let me give you sort of a short example of this. And again, that employer-employee relationship. And usually this comes up in what we call STD or LTD on group disability insurance. So short-term disability or long-term disability on group disability insurance, which most employers will provide for their employees and everything. So let's say the employer pays $1,000 a year premium on your behalf. Okay, so there it is. The employer's paying for all this. And the benefit that you're going to get when you become disabled, let's say it will be $3,000 a month. So that's the package, basically. Employer's paying $1,000. You become disabled, you get $3,000 benefit after the waiting period, things of that nature there, okay? Now, because you never actually paid anything for this, the employers actually paid the whole thing for you. So going back to this here, the result is that $3,000 will be considered income, and that income will, of course, be taxable. Okay, because remember, you never paid for it. And so therefore, you now have to pay for it, because here the employer has actually paid everything on your behalf, and therefore you never paid for it. So therefore, at the end of the day, you have to turn around and pay your tax on that income. The second example is, again, the employer, let's say, is paying that premium, $1,000 per year, same as before. However, this time, the employer actually shows as taxable benefit. In other words, shows that $1,000 as taxable benefit. So it will show up, let's say, on your T4. When you get your T4 at the end of the year, basically when you do your filing and everything else, okay, basically you'll see that $1,000 actually shows up as a taxable benefit. Now, because it does show it on your T4 as taxable benefit, that means you're paying for it. The employer's not paying for it. All the employer is doing is forwarding the check, let's say, to the insurance company on your behalf. But at the end of the day, you're still paying for it. So because you're paying for it, we go right back up to this one here, you see. And therefore, the money that you receive, that $3,000, the benefit that you're going to get, will be, in fact, tax-free. Okay, so that's in essence what we're saying, is that if the employer pays all of it, it doesn't show it as on your T4 as any kind of benefit. In other words, you're not paying for it at all, then the benefit at the other end will be taxable in your hands. So your $3,000 then has to be reported as income. Okay. But if the employer pays for it, in other words, fires off a check, let's say, to the insurance company, but does show it on your T4 as a taxable benefit, in other words, you are in fact paying for it, then obviously then the benefit will be tax-free, because once again, you're paying your premium with after-tax dollars. So the moment you have it as a taxable benefit, you've already paid tax on your premium, and so therefore the benefit at the other end will in fact be tax-free.